myself back. We missed you, Bo. We gotta thank Ashley tenfold for holding it down. I don't even know how to do my job no more. So we are gonna go ahead and get started with our afternoon session, our financial literacy session. But before we do have those same brief announcements. I'm gonna run through those real quick, just to remind everyone what fully present looks like in the room, okay? For in-person attendees, fully present means keeping our side conversations to a minimum. Remember that our new technological upgrades, what is a tongue twister? Technological upgrades include microphones in the ceiling, which not only pick up audience questions, but also conversations. So if you've ever been at home and you're like breaking up, that's because somebody in the room is having a conversation with their neighbor, and now you don't get to hear our presenters as well. Please be cognizant of your side conversations. Please silence your devices. If you think it's off, just double check, make sure. You might got emergency bypass on somewhere. And put your screens away. Arrive in professional attire, take notes, and of course, participate in discussion. For our virtual attendees, we've transitioned to a webinar meeting format. You will not have access to your camera or microphone in the meeting unless you raise your hand and are called on. You do have comments in the chat. The chat should now be open, y'all. Please double check and make sure that is the case. I'm seeing folks still put questions in that should be chats. I want to make sure we've got the chat open for y'all. Make sure to use that Q&A feature for questions and respond to any poll questions. Thank you for not commuting, working, or otherwise multitasking during your PWG meeting. Finally, if you are joining Zoom, ensure your name is visible so you get attendance credit. If you can see your name, so can we. If you can't see your name, neither can we. Without further ado, I was about to sit down. Please welcome Bank of Texas here to talk to us about credit scores.
Is it green? Oh, it's green, I can hear me. Hello. I'm so excited to be here today. I see some familiar faces. So happy to see you again. My name is Angela Williams, and hi everybody on the phone too. I am the Community Relations Manager for Bank of Texas in Houston. So I do a lot of client events, employee engagement. I manage our partnerships with our nonprofits, including Dress for Success Houston. And I love to teach personal finance. Also with me is Par Larson, mortgage officer, and Cameron Yates, a trust officer. So as you can tell, we've got a variety of people from the bank teaching this class today. We are excited to talk about credit scores and reports. So exciting. I know it's kind of like, oh, I don't know about this, but it's great information. We're trying to make sure that we share everything. As we're going through the presentation today, please think about the questions that you have and maybe jot them down, or if you've got a piece of paper, jot them down, and we will have a session at the end to answer those questions that you may have. We're trying to stick to the credit scores and reporting and credits topic, but if there are other questions that you have about banking or finance, as long as it's not about crypto coin or whatever, I can't answer that. Crypto, we might be able to address those here today. So let's get started. Oops, let's see. It must be stuck on something. Yeah, maybe Ashley. There it goes. Yeah. Okay, so today we are going to explore the importance of credit scores and reports. We're going to learn how to access information about credit scores and reports as well. We're going to discuss strategies to help build and improve your credits. And we're going to identify how to protect your credit from incorrect claims and fraud. So credit can have a big effect on your financial life. Your credit report provides a snapshot of your financial habits that financial institutions, cell phone companies, credit card companies, and other businesses use to get a sense of your credit worthiness. It gives them a sense of how well you can manage your money and pay back. Remember your GPA from high school? Mm-hmm. So your credit score is now your GPA of adulthood, right? So understanding how credit scores and reports work can help you keep your finances healthy and help you achieve your financial goals, such as buying a home or leasing a car or paying off debt. So let's ask a question. How well do you know your credit score? How well do you know it? Even if it's not perfect, you kind of have an idea a little bit? Okay.
Yes.
Yeah, a little bit. Okay. And it changes too, right? And we'll get to talking about the different credit agencies and bureaus. But it's always good to kind of be on top of it and kind of have an idea, especially to check and make sure everything is correct on it from a fraud perspective. There's so much fraud. How many times do you hear about someone getting their credit card stolen or something happened, a bill got stolen out of their mailbox and the check is processed, fraudulently. There's so much fraud today. It's a great idea to just stay on top of your credit score. So before we get into why credit scores are important, let's actually discuss what they are. So a credit score, like we were talking about the high school GPA, your credit score is a 3-digit rating. It's always going to be 3, which tells a lender how likely you are to repay the debt. And different lenders are going to use different criteria to calculate it, but in general, the data is grouped into 5 categories, including payment history, amounts owed, length of credit history, new credit, and credit mix. So you think, oh my gosh, that's a lot of data, right? But your financial life is complex, right? There's a lot of things that go into that. So let's look at some ranges for a credit score. So in general, people with a score of 579 or below could probably help build their credit history. People that have credit scores between 580 and 669, they might have a difficult time qualifying for loans, but even if they did get a loan, they might be paying a higher interest rate. But they could still get a loan, but it might be a higher interest rate. Good credit is defined as 670 to 739. So if your credit is between those two numbers, you may have blemishes on your credit report, and you may be restricted to higher than average interest rate on loans, but you can still get a loan. And very good credit is between 740 and 799. So you probably qualify for most loans. You'll probably have a solid credit history. You may have a few missed payments here and there, or possibly your credit history may be shorter, but you'll still be able to get that loan. And then the last range is above 800. So if your credit score is above 800, you have the strongest credit history and qualify for the best loan terms and interest rates, which means that it'll typically be a lower interest rate than the average, and maybe some terms that will save you a little bit of money, because it's all about saving you money. So your credit score can be poor, fair, good, very good, or exceptional. But what if you don't have any credit history at all? So many people, especially young people, maybe your kids, someone you know, people who have recently immigrated to this country may not have a credit history at all. But that's not a bad thing. So it's not the same as having bad or poor credit, just to have no history at all, because you can build it. And although people without credit history may face similar difficulties in getting loans and proving their credit worthiness, it's still possible. So there are some steps that you can take to start building credit. First, one thing is to open a line of credit. Well, this could be a credit card through a bank or a retail store or a small loan. You can repay this on time and in full. Typically, it's a small credit limit, and special products such as secured credit cards and credit builder loans are designed to help boost your credit, but they may have some restrictions. So does anybody know what a secured credit card? What is it? Got it.
Something happens, they penalty if you.
Exactly. So a secured credit card is where you basically put down how much you want to get on the credit card. So maybe at $500, you give the bank $500, and then you can borrow up to $500 because the bank knows if you don't pay the bill, I got your $500 over here. So it's secure, but it doesn't give you the ability to build credit. Question?
Well, I was gonna ask this. First credit card I got after I crazy with credit cards.
We've all been there.
it was secured, but I didn't have to put a big deposit down. I had a charge that they charge every year for the credit. And I got my limit, but I only had to pay that one flat fee once a year.
Got it. Yeah, so there's lots of options to help you kind of start out and build that credit history. So you can also request that your payment history be reported. So I'm sorry, question real quick.
And also with a secure, if you pay split for like a year, they will reverse it from secured to unsecured. Some of them will.
Yeah. Very good. Yeah, you still have to kind of pay attention, stay on top of it.
Yeah.
So, another option is to request your payment history be reported. So you rent, you pay your landlord, a monthly rent, or your utility company has positive record of you paying. Although they're not required to, you can ask them to report your payment as consistent, reliable payments to help build your credit history. It is an option. Another option, totally optional, is opening a joint account. You may request a family member or a friend with good credit co-sign a loan on a credit or loan application, but remember, your actions affect that credit score. If you still want to be friends with them, or don't want to be invited to Thanksgiving dinner, then you better pay your bill. And then 4, paying all your bills on time and in full. I mean, that'll be a consistent theme that you see throughout this, is paying on time, paying on time, paying on time, paying on time. Want to make sure that you're paying on time, just to show that you are responsible for the credit. Are we doing a credit question on the screen? Oh, it says good afternoon.
Yeah, I was gonna
Okay.
say, when it's secured,
Okay.
does it move the credit score typically by how many points?
Oh, it would depend on the personal, situation, yeah. It's kind of hard to define. All right, let's talk about a couple of examples. So how does your credit score affect your daily life and your ability to achieve your financial goals? Well, let's look at a tale of 2 friends, Anna and Bella. They've been friends, for some time, and they want to get a home loan. They both decide to buy homes in their childhood neighborhood. They've been friends since middle school. They both are single. They both have steady incomes to pay their bills. And Bella receives a loan without any trouble. Unfortunately, Anna has a difficult time getting a loan. When she finally gets her loan approved, her interest rate and insurance premiums are higher than her friends. I wonder why. Anybody? That's what their credit score, yeah. Now that you know Anna and Bella's story, let's figure out let's see if we can figure out a few details. So what do you think happened to Anna? She probably has some things on her credit that her friend doesn't know about exactly. But also credit scores are not the only factor that lenders consider. So factors such as the market, down payment amounts, loan terms, lender loan policies can also influence the cost of a loan. And experts and research shows that one's credit score has a large effect on the cost of the loan. Debt to ratio income. Yes. We'll talk about that in just a minute too. Let's see. So as you have seen, as you've seen, credit scores affect your ability to get a loan, of course, as well as interest rates and insurance rates. They can also affect your eligibility for rental homes. Your credit score can have an impact on many areas of your life, including getting a car, setting up utilities and phone service. Essentially, anybody that is, or any organization that is seeking credit from you, they should be able to pull your credit to ensure that you're a lender, that you're a responsible borrower that they're lending to. So how much this depends on the 3-digit score. And who comes up with this score? So there are 3 credit scoring agencies. What are they?
Experian, Equifax, TransUnion.
Yes, those are the 3. And even though there's 3 and they sort of kind of follow the same algorithms and modeling, they're still different. They're different bureaus. There are many agencies that prepare credit scores. They often use models to calculate them. And there's a couple of scoring models. One's called FICO. Have you heard that before?
Yes.
The one's called Vantage Score. The 3 main credit bureaus that we talked about, Experian, Equifax, and TransUnion, use those scoring models to help identify and calculate the credit score. These guys, along with other lenders, use their own version of FICO or Vantage Score credit, Vantage Score credit scoring levels. So these bureaus keep track of your credit history separately. They all do it individually. So it's a good idea sometimes to check with each one of them. And they all have their own websites. They all have their own ways to get your free credit report. And so if there is a large variation between the three, so if you get a credit report from each of these three and you see a large variation, then something's up. Because typically they will be very similar, very consistent. They'll be in a very small range of each other. So if something's off with one of them, I would definitely investigate that bureau.
What's a large variation?
I mean, what do you think, Par? I mean, I would think 50 points would be a big, 25 to 50 points.
Typically scored, well, the reason why they're different is because you might have a creditor that only reports to one bureau. Like, in the case of doing like your utilities and asking them to be reporting. So it doesn't necessarily go to all three bureaus. So that's one reason why, but yeah, discrepancy, a large discrepancy would be 50 points or more.
Yeah, I would say 50, I mean, give or take 50 points. If you see that much of a difference between 2 out of the 3 or 1 out of the 3, I would definitely investigate.
Okay.
Yeah. Yes.
So if, for example, if we're paying off a debt, can we ask for a creditor to report to all 3 bureaus?
Yes.
Can you report just one?
Yes. I would say why not? I mean, all they're gonna say is no if they can. Absolutely, ask, yeah.
Most large credit cards will report to all three.
Yeah.
So just keeping that in mind, but yeah, you can check.
We have a question too in the chat. Can you elaborate a little bit on request your payment history be reported? What does this mean? Is it only for landlords to report our payment history and to whom?
Yeah, so it's gonna depend on whoever's taking your payment, and you have to ask them to do this. You can make it easy for them and tell them which credit bureau you'd like for them to report to possibly. But you're gonna have to manually ask them to report this to the credit bureau because you're asking for them to reflect your credit history that's been positive and been consistent, and you're asking them to do that for you. So you'll have to call each individual company, whether it's your landlord or a rental company or a utility company, and ask them to do that. Yeah. Oh, I'm sorry. Go ahead.
So credit bureaus are not like government entities, so who governs them?
That is a really good question. Who governs the credit bureaus? Har, do you know?
Don't know.
I don't know.
They really only
I'm gonna Google that while we're talking.
they really only report what the creditor, information the creditor gives them. So that's why I'm gonna talk about in mind, like what to do if you think something's wrong.
Yeah.
If something's not reported correctly. Some of these questions will be answered in the second half.
Yeah.
But really quick, there was a question, and I don't see it anymore, but it was about, if you add your children or add somebody on as an authorized user, that will help somebody else build credit if you have good credit.
Yeah.
If you have good payment history, but before you do that, you need to ask Capital One or whoever the creditor is, if they will report on the authorized user's credit. Because not everybody will. So making sure of that absolutely can help. And I've done this for my kids and never given them a card. So I don't have to worry about them charging
Yeah.
me on it, but they're on and they're getting the benefit of my credit history. And that's helping them.
So I'm gonna keep on going, and we can answer questions at the end too. So as mentioned earlier, different credit bureaus calculate your scores in different ways. And they may not disclose exactly how they calculate it, but they're all gonna use the same general factors, which are these 5 factors. So okay, let me ask you this. Those 5 factors: amount owed, history, length of credit history, new credit, types of credit. Which ones do you think are the most important? Anybody want to guess? Payment history. There's actually one more that's also most important. Amounts, oh, yeah, so those top two, those, make up the biggest percentage, so we're gonna look at the percentage of, how much they play into, so payment history, I'm sorry, let's do with amounts owed, that's the first one. That is typically 30% of your score, payment history is 35% of your score, so that's 65% of your score is from those two factors. And what did we just talk about? Paying on time, pay on time, pay on time. We're gonna pay on time. We're gonna pay on time. Paying on time, so payment history is so important. Even if you can't pay the biggest amount or a large amount, just paying the minimum on time, just to get that constant, payment history flowing in there. Question? Yes, yes, yes. So amounts owed, we talked about, that's actually how much you owe on the credit card or the loan. And then also what they look at is how much available credit you have available, I mean, how much credit you have available. Those are played into that amounts owed calculation. So third on the list is length of credit history. This is 15% of your score. Not as critical, but it's still important because you want to have some history. You want to have some time with your credit so that you can show how many, show what you've got going on and your responsibility for that credit. Fourth thing is new credit, that's about 10%, and types of credit is about 10%. New credit is those accounts that you recently apply for. And the lender may check on your credit score that may temporarily decrease your score, but it also signals that you might be using too much available credit. So new credit is not anything to just mess around with. Want to make sure that you are paying attention to all 5 of those for the calculation of the credit score.
So type of credit, do we have choices of the choose to what type of credit we want, or it depends on the scope?
You have a choice on the types of credit. I'm not following
Like
you.
type of credit, like for example,
Oh.
FHA, or I think it's a conventional or whatever, but do we have choice, or it's depending on the credit history?
You have a choice in terms of types of credit because it could be a home loan, it could be a car loan, it could be a credit card, it could be a mortgage. That's the variety of types of loans. I mean, types of credit. They don't want you to have too much available credit in any one, probably with the exception of mortgage. But having the variety helps with showing availability, flexibility, options for you from a credit perspective. We're going to skip through the cost of co-signing because I think we all understand a little bit. Let's talk about what is a credit report. I want to make sure we get all the good info. We don't miss anything. Okay. So the credit report, we talked a lot about credit scores, but what is actually the credit report and why and how are they different? Are you going to get your credit score on your credit report? No. So that's another thing to make sure that you are staying on top of. And there's a lot of free ways to get your credit score now. A lot of banks are offering options to get your credit score. It's super easy to have your credit score available to you at your fingertips. But the credit report is going to be all the history, all the data, all the things that are affecting your credit score. It's all the reasons why is laid out in that report. It's basically a snapshot of your credit profile and includes your history. So every time you take out a loan, whether it's a personal loan or a credit card, those actions will show on that credit report. So that's another reason why you want to take a look at it. You know, every so often, probably annually, just to make sure you're on top of what your credit report is saying. So there's 3 nationwide credit reporting bureaus that calculate your score, and that can give you a free report. The one free credit report per year is from Annual Credit Report, and I have it, it's listed in your participant guide in your folder. That website is there. So once a year, get your free annual credit report. The website's right up there. There's a phone number as well. It's a great idea to do it once a year, and some people will do it every 4 months. They can do Experian, and they can do Equifax, and then they do TransUnion, just to spread it out to keep your eye on your credit report throughout the whole year. That's a clever way to look at it. And because you can only, the reason you do that is because you can only request one time a free report from these 3 credit bureaus. Unless you've had a major fraud issue or something major has happened in your life, and for those particular reasons, so like denial of credit or unemployment, or if you're on welfare or fraud, you may be able to get an additional credit report per year. All right, so I'm going to transition it over to Par to talk about your free credit score. So that's very,
Okay, CFPB is the one who governs, if you guys Googled it, but and also the Fair Credit Reporting Act, but CFPB is Consumer Financial Protection Bureau. Okay, we're gonna go on to how to request your score from the 3. Give me just a second to. Are we on? Sorry about that. Okay. Let me go. Nope, I got it. Okay. So your score, like she said, you can get that from the bureaus directly, but it's different from your credit report. So I didn't see on here how to get that when we looked over this. But let's go over this. You can actually, anybody have online banking or online credit card? A lot of times they'll do your score for you and you can check it. Just so you know, that's an algorithm because creditors report once a billing cycle back. So even though you see your score change every day, it's not necessarily like if you had your credit pulled, it may not match exactly because those are algorithms that they use for those. Okay. So reading your credit report. Your credit report contains the following information. So it has public records, which are lawsuits and bankruptcies, judgments, delinquencies, or unpaid taxes. It has your personal information, name, birth date, social security, address, name of spouse and or employer, and then credit accounts, debt status, open and closed accounts. It'll also tell how long you've had those accounts for on your report. And then the credit inquiries. Those are organizations, people, or agencies that have requested to verify your credit in the past 2 years. Just so you know that those stay on, a credit inquiry stays on for 180 days, like on the actual report, okay? So I think Angela mentioned that early on that you don't want to keep applying for all new credit from various places. That will actually end up hurting your credit, and it stays on for a significant amount of time. So important dates to review. You want to view, so this is about your credit report. So you want to look at your credit report and look at the date your account was opened. Also, if there are any dates of delinquency, you want to look at those, and public records and dates of credit reports. You also want to look at your personal information to make sure that that information is correct, especially if you've had a name change, something like that, because you want to make sure that nothing is a hiccup for you if you go to apply for credit. So how to dispute items on your credit report. You can write a letter to a credit reporting agency, send your letter by certified mail and request a return receipt, and then send an additional letter to the information provider. So say you have a dispute with Capital One, your credit card. You're going to send that letter to Capital One and also to TransUnion if that's who reported the negative information. This right here is really if you think that it was done in error. So the Fair Credit Act or Fair Credit Reporting Act, actually, if it's a legitimate infraction, like you missed a payment, they're not going to remove that because it's actual. You want to do it if it was in error, right? That's how you dispute that. However, I would say that if you make your payment and it's 30 days late and you've not had a missed payment before, I would call them and say, hey, Capital One, I've had a good payment history. I missed my payment and, but it was the one time. And they will sometimes take off the fee, the late fee, and sometimes if you catch it early enough, they won't report it. So it's always worth a shot, right, to call. But when you realize that you've missed, make that payment right away, call them. That's one way that you can help. But sending your letter by certified mail and requesting a return receipt guarantees that you know that they actually got it. Yeah, go ahead.
They don't really do the letters as much anymore. Everything, I do mine online and they tell you within 7 days because waiting on a letter now. is
Yeah.
So long.
This is if you want something removed from your credit report. Is that different than what you're saying? Or
I do it, I get it removed too. I got my name changed. They have my name up there. don't
yeah,
have
you
to-
can do,
Yeah, I got my name.
everything is online these days, you're right.
I
So,
didn't know that though until I got a Chase account and Chase helps you with your credit. And so when you're looking at your credit, it says, would you like to dispute? And so I just started disputing everything.
oh yeah, that's awesome. That's awesome. Yeah, get on the computer, see, go to your account. All right. Steps for repairing credit. Monitor your credit report and scores. Like Angela said, we're gonna beat you over the head. Pay your bills on time and regularly. Get credit counseling if you need to, and consider financial products. One thing, if you want to write this down, you might put this in the chat because I gave it, I didn't give the right address. Actually, let me look at my phone really quick. But you can opt out of pre-screen offers. And it is 5 years, but you do go to prescreen.com, and that is you opt out. That's through Equifax, and that you can opt out of getting all those pre-screened offers, and that actually gives you a slight boost to your credit score if you do that. Yes, it is opt, O-P-T, out, O-U-T, pre-screen, S-C-R-E-E-N, sorry, .com. And going to that, and you just fill out a little form, and it opts you out of pre-screened offers, and it gives you a little boost to your credit score. So, credit counseling, here's the thing. If you're in trouble, there's no shame in getting help, right? That's what we're here for. We're here to be better, to do better, to learn how to manage better. Credit counseling is a great way to get yourself up. Also, if you have credit card debt and you are having a hard time just, can barely pay the minimum payment, start with the smallest one. Make your minimum payment on all of them, but put extra towards the smallest one. Pay that one off first, and then take what you would have paid on that one now that it's paid off and roll it into the next smallest one. That is a great way for you to see that you're getting traction and being really responsible to get that taken care of. It's overwhelming if all you're doing is paying the minimum on each and you don't feel like you're getting ahead. So, some people will say, oh, pay the highest interest first, but you're not going to get as much traction as if you just pay the smallest one and then apply it to the next smallest one, and so on. Credit Repair Organizations Act. That was established to protect your rights as a consumer, and it prevents credit repair organizations from engaging in false advertising and deceptive practices that can cause you harm. So, here's some credit repair scams that you need to just be aware of. To improve her credit, Anna researches several credit repair companies. The first company promises to remove bad credit information from Anna's report. All she has to do is pay an upfront fee. Anna is worried about her bad debts, but the company assures her that it can scrub all negative information from her report. The company also advises Anna not to contact the credit bureaus directly, since doing so will negatively affect the company's efforts. Anybody see a problem with this?
The whole paragraph.
So what's the first thing that you guys see? Upfront fee, okay. What's the second one?
Assures her that they can scrub it.
Right,
Nobody can.
right. Nobody can guarantee that. Again, because by law, creditors can report true and accurate information about your credit history, right? So for somebody to say that they can get that off when it is a true statement is not, they can't guarantee that. Okay, and then the last thing that you see on there,
Requires credit bureaus.
right? Sounds a little shady, right?
Don't tell anybody.
It's your credit, you can contact the credit bureaus, yes.
Really the first line where they promise to remove it,
Mhm.
usually when they're disputing it, it's really true, they're gonna put it right back on, so. They're like temporary remove it, and it goes back.
Yeah, yeah, I still want to say something here, but I want to just, no, I don't want to get off track, but what I will say is that you can investigate. You can send out inquiries and say, you can kind of challenge some, like a negative reporting line. And if they have not reported correctly, they have to by law remove it. So that's kind of the steps that you would take. If you have negative credit that, or maybe you have a collection, and the collection is old, say it's 3 years old. You have gotten hit on your credit score from that collection, but if you pay that, you're gonna get another hit. Because that there's a 7-year cycle for negative information. And if you pay that in the middle, so before you pay, I'm not telling you not to pay your debt. That's not what I'm saying at all. Sometimes people have medical collections, they have no idea because they thought insurance had paid it and they just didn't know. That's why it's good to monitor. If you have a credit collection, especially medical, and you find it right away, oftentimes they will remove it and set up a payment plan for you to do that. That's the one, I do mortgages, that's the one I see the most often is a medical collection that people weren't aware of. If it's old, then I would work with them to see if they'll remove it if you make the payment. You know, you can ask a creditor to remove bad credit if you make that payment. All right, red flags of a credit repair scam. So that's what we just went through. Requesting to pay upfront, promise to scrub all negative information, or alter legitimate information. That's what I was talking about before. And then a warning not to contact the credit bureau directly. So other signs of a credit repair scam, asking for a signature on blank paperwork. Oh, gosh. And credit profile number scams and fake social security number scams.
Profile number scams.
I would think that they would say, like, if you call this number, then they will get your information and collecting personal information. That one I'm not quite sure, but or maybe they're calling you and you don't know who they are and they're offering to help you with your credit, right? Fake social security number scams, my guess is that they're saying, hey, we can get you a new social security number. Yeah, don't do those.
Like 2 years ago, great credit, they were pretending to be bankers, and they were calling automatic people from their actual bank that had some kind of way to make it show up as Wells Fargo or whatsoever. And they reported, hey, this is on your credit. Work with us to help us fix it. And it turned out they were all fraudulent and just getting people's information.
What do you think you would do if you got a call from somebody? So say you have an account at Bank of Texas and somebody calls and says they're with Bank of Texas and there's a problem. What do you think would be a smart thing to do?
Go to the
Might not
next
have
video.
time.
Go to the bank, go inside the bank, or even hang up and look up
Okay.
that particular branch, you know, the branch that you're familiar with, and call them directly and say, I got a call. Is this legitimate? Don't, it's always better to err on the side of caution, right? And especially not giving people your personal information.
Because they should have it, right?
Exactly. But even me, when I do a mortgage application, it blocks out all but the last four. So you enter in that your social security number, or even if I take it, it's not on the application anymore. I can't see that. So, but I could verify it by saying the last four, right? All right, here's a couple of reputable credit counseling services: the National Foundation for Credit Counseling and Financial Coaching Association of America. Is that in their packet? Okay, so those are in your notes already, so you don't need to write those down.
Those are free.
I don't know if those are free. I haven't used those. There used to be one years ago called Consumer Credit Counseling. And they do take a very small percentage of the monthly payment that they set up for you. But it's not an upfront fee. It's not a, you know, they work with you. That's a great question. I had the answer. So strategies to improve your credit. Like Angela said, use less than 30% of your available credit. One great thing to do is something that you do that you buy on a regular basis. So say gas. When I gave my kids, when they got their cards, buy gas with it and then go home and pay that bill. The next week, buy gas, go home, pay that bill. You're really using it for things that you need, not things that you want. And then having the money set aside so that you can pay that, that is one of the quickest ways to boost your credit score. If you pay off your credit cards and don't use them, then the creditors, now you're stagnant. So using a credit card you paid off to buy something that you would normally buy, and then paying it off is the quickest way to rebuild credit. Do not max out your credit cards. The main reason to not max out your credit cards is, one, you can't, if you max it out, you don't have the means to pay it back, right? And you're gonna get compounding interest every month. So if you have $1,000 on your credit card and you can't pay that, and then in a few months, that's now $1,400 or whatever. And so now you're paying more for the credit than if you had just bought something. So the moral there is, don't buy things that you want with credit unless you've saved up so that you can pay it off. Delaying gratification, which is really hard to do. I understand that. Yes.
Okay, like I heard that by doing it doesn't affect my credit, is that?
Well, I guess I wasn't meaning necessarily like same day, but yeah, I would pay it. You could pay it at the end of the week. You could, but my point is you're already gonna. Right. Yeah. As soon as it's not a pending, you can pay it off. Yeah. So, yeah. So, yes.
So like, for some credit cards, we have like 12 months, without, interest.
Mm-hmm.
So would you recommend to pay it before the 12 months or
Yes.
whatever? Or, will be as you use it, you pay it? Like what helps more?
So, well, for budgeting purposes, it helps more if you just pay it on a regular basis, even if you don't get interest. The problem is that people think, okay, I have 12 months, and then at the end of the 12 months, it actually calculates the interest for those 12. It gives you back interest for anything that you don't have paid off on that card. So you have to be really careful about those. Like if you're doing a balance transfer of a credit card that you already have that say is at 25% interest, and you're going to do a 12-month, that's where I would say take advantage of a 12-month no APR, so that you can now, you can take that, transfer that balance over, and then just make your payments. And you can take it and spread it out so that you know in 12 months, I'm gonna be done with this.
Yeah.
Right? I think that's actually a really smart thing to do, especially if you're feeling stressed out about that. Go ahead.
So if I complete, pay off within the time,
Mhm.
but, it's still I'm getting, just yearly payment.
Mhm.
I don't know, technical security or something. So, is it good way to close the account, like close the credit account with the company or maybe?
So I would definitely, so just to recap, let me make sure I understand. So you're saying if you have a credit card that has an annual fee. and-
Yearly payment, other payments, like extra
Right,
payments.
right. So you paid off the card and you still, they typically call that an annual fee. I would say get rid of that card. You may need that card in order to establish credit, but once you establish credit, find a card that doesn't have an annual fee. There are plenty out there.
If we close the account, they will not.
So no, not necessarily, and that's one thing. So one of the things, you might see a slight dip if you close a credit card. Go ahead. Right, it does, it decreases your credit history. So, but if, I think that's somewhere, if you go to credit counseling, they can give you kind of the more the ins and outs of that, because once you have other established credit, you can let something else go, but length of history is important. Thank you for clarifying that. Right. Yeah, your available credit. But if you have a good payment history, you might call Best Buy and say, hey, we've been a customer for this long, and do you have a card that's no annual fee? And see if they can just, like, I will say that's true of some of the major credit cards. I don't know about store credit cards, but that would be another thing, so that you stay in there as available balance or credit, available credit that you have. So let me go back through these just really quick. So paying your bills on time, pay off your credit card bills each month in full if possible. That's not always possible, but that's where I was talking about pay your smallest one off first. And then the next month, once that's paid off, then you have more to apply to the next one. That will really help you decrease that. Do not apply for multiple loans and credit cards at the same time. This is where credit inquiries, if you have 1 or 2 credit inquiries a year, there's nothing wrong with that. But if you have 10, 11, 12 a year, that's going to decrease your score, and it's going to limit your ability to get credit in the future. So make a financial plan or a debt management plan to reduce debt. I gave you that tip. Create and follow a monthly budget and review your credit report for accuracy. So to summarize, you've learned how to understand the importance of your credit scores and report, how to access information about your credit scores and report, and how to identify strategies to build and improve your credit, and how to protect your credit for incorrect claims and frauds. So now, do you want to come up with me and do questions? And I cannot read that, so even with my glasses on, I cannot read that.
So first question that we have is,
Just gonna go around and pick up some questions from the audience on your.
Oh, perfect.
Yeah,
Okay, you have some online questions?
we have quite a few.
okay.
So for a person preparing their credit, which is growth, is there a sample letter that you're able to share, or how would you?
We don't have one here, but I can guarantee you, if you Google that, I'm sure there's
Yeah.
free, easy templates. Go to Copilot, say, write me a letter to the credit bureau, and with this, this, and that. I'm sure there's some templates you can find easily online.
Right.
Anybody use Copilot? AI, okay.
Yeah, okay.
Paid off, you sold out, and whatever. How long is that supposed to stay on your credit if it's?
So 7 years is typical time that they can keep something on your credit report that's not active. So a collection, if you close an account, if you paid off an installment loan, those will typically stay on for 7 years.
After 7 years, it's off. We have negative.
I'm sorry, ask that again?
After 7 years, does it go off completely?
No. So in theory, after 7 years, if you have negative credit, say you have a collection and at 7 years, it should come off. Well, one thing that can happen is somebody else, an attorney, somebody else can actually buy that collection and they can start the reporting cycle all over for 7 years. However, if you have a lender who's looking at that, it does play a factor in that to say like, okay, look, this is this account, it was bought out, it's an old account, and most lenders will understand that. But you do need to be aware that, and that's something that maybe you could go fight with the credit bureau and say, it's been 7 years and it looks like somebody bought this and how do I get this removed? And maybe just see, but that is something that can happen.
And if they buy it, you have to pay. I mean, if they buy they can.
You know, they bought it for pennies on the dollar and they're trying just to collect money. So, again, I'm not telling you not to pay your debt, but I will say that if you make a payment, it starts that 7-year clock over again. And so, give me 1 second. Let's answer one of these and then we'll go, and then we have her and then you, okay? Is that okay? Okay. Yes, student loans. Student loans report just like any other trade line on there. If you're having trouble with your student loan, call them directly. They're pretty willing to work with you on your student loans. Yeah, that's true.
Ma'am, do you have a question?
Okay, go ahead.
There was a company I bought something. So I was paying.
Mhm.
So it got to a point. They said, okay, if you pay for 3 months, that's it. So after paying for 3 months, I just withdrew. They kept, because it was automatic payment, they kept debiting me. I was like, oh no, you are debiting me more than it should. They apologized. I said, okay, they are going to stop it. After a while, I don't got a letter from one company that I'm owing them $600 and something. I replied, I said, no, they are the people owing me. Because they withdrew from my account because it was an automatic payment. I don't know how to do that. And it's really affecting my credit.
I would,
You have to dispute it twice.
yeah,
My identity has been stolen 3 times.
Is that what?
So you have to call the company and dispute it, then you call your bank and dispute it.
No, my bank has already stopped them from taking my money.
Right.
You still have
But
to
it's
call,
affecting my credit score.
still have to call both companies and dispute it. You can't like stop. You have, and then if you do it in writing, then they're required to respond to you in writing. And then
Right.
You have proof to show to somebody else.
right.
Okay.
Yeah, definitely. Even though you can do things online, I would definitely do as much as you can in writing because then it's timestamped. So that helps you and they have 30 days to respond. And unfortunately, you have to stay on top of it. Yeah.
So I have a question. If you think you gave someone access to your information, is there a way to stop fraud? Yes. So one thing is change all your passwords on everything that you have. Second is under credit bureaus. Call each one of them. You can do it super easy. All three of them, go freeze your credit.
Mhm.
You can toggle it on and off, freeze it and freeze it, freeze it and freeze it. It's super easy. If you don't have a lot of stuff going on in your life, I would go freeze your account just because. That way you know. And then when you
Yeah.
need to go apply for a home loan or whatever, go unfreeze it.
Yeah.
But that way nobody, I'm sorry. You can, but
You can, or you can
call
just
them.
call,
go
or you can go
online.
online.
Go online.
Yeah.
Have to call you and verify who you are
Yeah.
before they issue any credit.
Yeah,
Do an answer.
yeah. Really quick, I don't know if she's, do you still have a question?
Yes, then, you indicated, making a payment, or
Mhm.
is it just a payment that starts that clock over, or is communicating with the debtor also?
I'm sorry, I wasn't listening.
So she was talking about when you start
Camera
paying
distracted.
on on an old debt, that it starts the clock over. So go, what's your question now?
Contacting the debtor starting over, or? is it just a
No.
Payment.
It's a payment.
I think it's the activity, right?
Right,
That
so
doesn't
if you
happen.
call them, they can't, what are they gonna put on there, right? So, yeah, so you making a payment, yeah.
Okay, so we had a question, how to get an interest rate reduction. The simple answer to that is simply to call, the company and ask. The worst they can do is say no. They'll probably,
Mhm.
yeah, manager, supervisor,
Karen,
throw a fit.
No.
Here's the thing, a call center person in the call center does not have the authority to make decisions, and so you asking for a supervisor, you have to, you're gonna have to sit down for an hour and try to escalate up to the person who could make changes.
Another question we have is if you are approved for credit card, but you never use it or they could activate it. I think that could be fraud, but if you're not using that credit card, that available credit still counts towards your credit score. So if you had, say for instance, you had 2 credit cards and they each had a $5,000 available credit. So that's $10,000 of available credit, right? And you had $1,000 on one of those cards, but nothing on the other. So that's 1,000 out of 10,000, that's 10%. But if you close that $5,000 one of those cards, that would drop your available credit to 5,000. Now it's 20% of your available credit, 1,000 out of 5,000. So then your available credit goes down. So you want to be sure that you,
Well, even if you don't,
Yeah.
even if you don't close it, just to piggyback off of you,
yes,
creditors want to see that you want to use their card. They don't want to see that you need their card. Okay, so they want you to use the card. That shows, that's why I say if you pay off a credit card, then that's a great time to take that card that you've paid off and use that one for gas, something that you already have money set aside for, and then pay it off. Because if it's stagnant, they don't like that either. And I say they, just the credit bureaus, the way the algorithm works. So, you want me? What is the 7-year cycle? That's just, that is the laws that are put in place to protect the consumer, that it applies more to negative reporting, that can be on, that can stay on your credit report for 7 years. And then a workaround in probably the last 10 years or so is that attorneys and other companies are trying to buy that debt just before that 7 years and trying to start the clock over. But that's the 7-year cycle.
What's the process to take it off if it's on there still after 7 years? Just
That's
contact-
through a dispute through the credit bureau.
question.
And the dispute is time.
Writing or?
So, I mean, I'm a little old school, I think writing, because then you have that record, but yeah, you can go online and dispute. And so you would go into like TransUnion, if it's on your TransUnion, go to TransUnion and probably in their search, look at dispute and see there, or make a call and find out like, how do I dispute this? Yeah.
Even if we just. So we have to give them the proof already.
You end up having to write them with proof anyway, yeah. Another question, when it comes to student loans, is it better to pay them off in full ASAP or to take our time with our payments to help our credit score? Very interesting and complicated question. It all depends on a lot of things, the interest rate on the student loan, your budget. One of the things that you want to do first off is have an emergency savings, and then second is to pay off high interest debt. And typically, sometimes student loan is high interest debt. It may not be high interest debt. So just the rate and how much you're paying, how it plays in your budget. I mean, you want to pay off your student loans as soon as possible. However, are there low interest rate student loans?
Yeah,
2%,
they're
3%?
much lower
Yeah,
than like
okay.
a standard personal loan.
So you could be paying 2% on a student loan and make 4% on a CD. So may not want to, may want to take your money and put it towards investing versus paying off because the interest rate is much lower. So that's a complicated question, but let's talk about budget, okay, for that one. Is debt consolidation helpful when
You can't pay off debts or accounts. Is that what that says?
when you
I think.
can't pay off debts?
Or-
I mean, if I would start asking all your debtors and the credit bureaus, like start with them before you start asking for help from an agency, wouldn't you? Like start asking the questions.
So the bureaus are, I wouldn't call them, I should call your credit.
Yeah, that's what I meant, not debtor.
Situation I'm in, and I want to pay my debt, and you. Yeah, sometimes too, you have a debt that you're like, they've already reported you to collections or whatever, because you missed, you're not collecting, because they've already reported you late. You can call them, and I think actually it's a thing that's in collections. You can call and say you'll take a lesser amount to satisfy the debt. And then on your report, it'll say paid, it'll say on there that it was paid less than the value, but that the debt has been satisfied. So, that still shows on your credit report.
The older.
That is helpful if you have some money to make a deal, right?
I want like, say it's $1,000, but all you got is 400. All of them, depending on the company, they'll take the 400, but you just have to initiate that contact and know your budget before you call them. Because they're gonna push really hard for everything.
And to piggyback on that, I know I did that a few years ago, to settle at the end of the month. Call it at the end of the month, make that offer, they're more inclined.
Because I used to work at a doctor. If a medical bill is $300 and you make a money order, gotta write a check, make a money order, $3, and write a letter, say to the doctor's office or collection or who, not collection. Yeah, collection if it's a collection. And like you have the really, really small print at the bottom of the letter and say, this is the legal action. If you endorse this $3 payment, you are agreeing that this is paid in full and you will report to the credit bureau, not a settlement, but paid in full. And majority of the time when you inputting payments, you're not gonna read that small. But you have to make a copy of it. So when they send you a bill minus $3, you can mail that letter to the credit bureaus showing what you said to them, and they endorse that money.
That I can't speak to, but.
I know. But it's a legal action.
Okay.
So I just want to say that like people should check their the EAP, the Employee Assistance Program, because a lot of like the debt consolidations and like help is offered through your company.
Okay.
Yeah, your employer.
That's a great resource.
I hear so much about medical bills not allowed to be on your credit, and I hear they are allowed to go on your credit. You know?
I pull credit all the time because I do mortgages, and medical collection is the number one thing that people who generally have good credit, who
they're like, wait, what happened to my score? And they didn't know that there was a medical collection. Because here's the thing, so a doctor's office is submitting through the insurance and they're sending the consumer a bill. The consumer is like, well, okay, I know that my insurance is paying this, and so I don't know what I actually owe. And so what happens is a lot of times it gets a little muddy, if you will, and people don't know that they don't always know that the insurance company has paid out what they're gonna pay, and this is what your balance is. And then it goes a few months and doctor's offices are like, okay, well, the collection, let's move on. Right, so yes, they absolutely are. If it's in collection, they don't report a bill to your credit report, but if it's on into collection, that's when they report.
But
After
a
so
lot
many
of
years.
times, doctor's office, if you have Medicaid and they accept the assignment, and they know Medicaid is only gonna pay them $400 for a $1,200 surgery. Well, sometimes they still try to send the consumer or the patient a bill for the remaining balance when they're not supposed to because they accept the sign.
Same thing happens with insurance companies.
Yeah.
You have online questions? Perfect. A lot of online questions. How does settling 50% of your debt affect your credit score?
Oh. So really the verbiage on the credit report shows that it says settled for less than full balance. So credit or a lender doesn't know how much it was settled for, but that can still stay on a credit report for 7 years.
Is it true that the credit bureaus only update your credit every 60 days rather than every 30 days now?
I don't know that. I have not known that I haven't heard that they were changing it, and it's a billing cycle and it's not the same day for each creditor. So cause all your bills are not going the same date, right? So.
And each creditor reports time, not necessarily the credit agency is doing it. If your credit card company is reporting at a different time, saying their month and how they're.
I'm working on my debt management plan. I have a question. I have an older home and pay $60 a month for my home warranty. And anytime I purchase an electronic or lawn care equipment, can I continue to opt out of those warranties, or is it best to ditch the warranty and just purchase new or toll fees if necessary?
Ooh.
So,
I'm not sure you have experts on that topic. I would, oh, that's complicated too, because it all depends on like how old your house is, what's the likelihood things are gonna break, what's the true value of that fee you're paying for, or what are you getting out of it? I mean, that's the calculation. Are you getting $60 or more worth out of it? And if you are, keep it. If you're not, then
Get rid
you
of
be
it.
saving
They
up
say
that
it's
money for
scam
a new refrigerator.
On new electronics and appliances, they automatically come with a flat warranty, and then you could purchase an additional one, and it's normally cheaper than that other thing.
That's not my forte. Yeah, I mean,
It's a scam.
yeah, there's so many factors in that one. My husband doesn't do warranty for anything. Whatever standard, because he's like,
It's gonna break anyway.
you know, he's like, I'd rather, I'm gonna need for something else and, you know, but.
can you do me a favor? Can you repeat the questions when we ask?
Oh,
I'm having
sure.
a hard time
Okay.
hearing them.
Yeah. Another question, we'll have one here.
What are a few good starter credit cards to build your credit? Discover has lots of good options, any type of department store, retail. Gas cards are also really good for that. Again, just keep in mind, avoid crazy high interest rates. Pay on time if you can. If you can't pay on time, again, going back to the interest rate thing, because that could really hurt you in the long run. But
Let's see, my mortgage company, this is probably for you. My mortgage company erroneously reported me delinquent to the credit bureaus for months. There's some type of recourse for this instance. Yes. If you've been reported erroneously, you have to go through the bureaus and the creditor and submit documentation to show that it was erroneous. They have to, by law, remove
Next question after,
Can I repair my credit on my own, or is it best to use credit counseling services?
can I repair my credit on my own or should I use credit counseling services?
You can absolutely repair it on your own. What I would say that a credit counseling company can do for you is hold you accountable, and some of us. And so sometimes we just need to know somebody's in it with us to help us find out. So again, no shame in going to a credit counseling place. We gave you two respectable choices, but you can do it on your.
Question, why do employers need or pull credit information? Not all of them do, but a lot of them will do. What's the why? For tax, for tax and accounting purposes.
This is what they,
That's not why.
no, see if you're trustworthy. They is based on your character credit history that reflects that on your character.
Right.
Yeah, 'cause I
So
want
just
you-
performance based. Okay, got it. Question over here. Ooh, that's an interesting question. What is a good number of credit cards to have? I think you and I disagree on this. Is that the one?
I would say you need 3 trade lines. So not 3 credit cards, but 3 trade lines. So maybe a loan, a mortgage, and a credit card. Minimum of 3 trade lines, with a variety in there. That would be a standard for somebody who can see the variety of accounts that you have.
Good answer. I would say at least 2 credit cards. Don't get more than a handful, but 2. Because what if one gets stolen, you're on vacation or something, then you've got another one to help you out.
Say something real quick, y'all. Let's make sure we're being respectful of other folks' thoughts and opinions. We do have the folks from Bank of Texas here, so we want to try and give them as much as to answer folks' questions. I am not trying to diminish anyone's education or experiences in the room, but let's make sure that we're being considerate. I think I just heard someone outright tell somebody no to what their perspective was, and we don't know everybody's history, so let's just be considerate and conscientious of that, okay? We got about 7-ish minutes, so we're gonna try and push through as many questions as we can. If we can hold our comments as best we can, so we can.
Okay, yes.
For me, I refinance, and so I have a friend who paid off her mortgage, and I was like, that's amazing. But I've been looking up stuff online, and different things online say, pay off your mortgage, and then other things say, don't pay it off.
It's the
What is-
debate of
what
the
is your
century.
perspective?
Okay, so we probably have different opinions on this too. It totally depends on your situation, but because of where interest rates are, so if you got a really good home loan rate, back about 3 or 4, 5, 6 years ago, when it was like 3%.
Yep.
Or 2.75, that's a really good interest rate. So in fact, my husband and I are arguing about this because we have a 3.125 interest rate and he wants to pay off the house because he wants it done. And I say I can get 6% in the market on that money, so I'd be making money on the extra money that we would have towards the mortgage. So it totally depends on what the interest rate is, if you can get more out of that money, or if you just feel like it's one of those things that you need to get off your plate. And if that is the case, then that's okay too. So it's a personal decision.
Here's what I'll say. Make 1 extra payment a year. So say your mortgage is $1,200, your principal and interest is $1,200. Add $100 every month to that. And then at the end of a year, and make sure you designate that it goes to principal, or else you're gonna have overage in your escrow and they're gonna send it back to you. But what happens is that at the end of the year, you've paid 1 full principal and interest payment. That will make your loan, that will amortize your loan 7 years faster. On a 30-year loan, now that's a 23-year loan. So it's a great way to save on compounding interest on your mortgage without feeling like I gotta pay off the mortgage, right? So, easy way to budget.
Question right here.
Does unemployment benefits affect credit score?
Do employee
If you
benefits?
lost the job
Unemployment?
Oh, I'm sorry,
if
unemployment
you're
benefits.
taking unemployment, so does.
It doesn't affect your credit score unless you're not able to pay your bills.
Some questions over here.
So I have a question about the mortgage. You have to let them know that it's towards the principal.
Yes.
You just call them
Yeah.
or write
Yeah.
them.
Yes.
Write it on the check.
I don't.
Sometimes, if you're doing it online, sometimes it'll ask you, do you want to make an extra principal payment? And you can plug in that amount too.
Yeah.
So I'm currently looking at mortgages
Mhm.
and I've been quoted 6-7%. How long do you have to wait to refinance if you
6
see that?
months. So her question is, when you buy a house and you have a higher interest rate, how long until you can refinance? I will just say with that, with your current servicer, it's 6 months before you can refinance.
We'll take one more
We
question.
have one in the back.
Clarity, yeah, you said to chop it down to a 30-year mortgage to 23 years, one payment a year?
Yeah, one
Extra.
Okay. Thank you.
Yeah, one extra payment a year. If you pay more, then it's gonna amortize faster and pay it off faster, but it's just a nice way to get. And also, most people don't live in their house for 30 years, right? Most people either refinance or they sell, move. But if you make that extra payment, when you go to sell, you're gonna have more equity in the house, you're gonna get more cash in your pocket, you're gonna sell too, so.
Thank you. Those were awesome questions. They got us on our toes, right? Yes. All right, thank you.
I want to say goodbye to everybody at home. Thank you so much for being with us. Another warm round of applause for Bank Protection. By the way, is a full-fledged partner in all financial literacy for PWG, so thank you, thank you.